making $493.83 in the month of September 2024, trading a couple of different prop firm accounts, which I will get into the accounts in a second. This is my favorite video of the month to make because we get to dive into the charts or the logs, the details, the stats, the data, the good stuff. And what we're going to do is we're going to take a peek at how my trading has kind of fared in the month of September. So first things first, I guess you should look at this. I was kind of covering up the only profitable days that we had. We're really only on Thursday and Friday. Now, this is a combination of swing trades and day trades, which we're going to get into in a second. And you'll see the breakdown of all of them. You will also see, at least me, try to go over, where I think I could improve, where I could, double down, etc. So we're going to do all that. Let's get into it. So I want to go across the top first, and then we'll get into the details. Is this a dollar amount that is nice? Hey, profit's profit. If you were to go back, actually, let's go back to last month. Okay, you were to go back to last month, we were down 742. The month prior to that, we were up. It was we've kind of been up and down the past couple of months. So it's been a little bit choppy. The win rates have not been nearly as high, but I think there's a promising stat that we're going to get into, and I'll explain what that is. And it's been a development that I have seen take place over the past couple of months. It was tough to really tell early on, and now we kind of have more clarity. But I'm still going to give it to the end of the year to truly, give it, the time it deserves, I think. Expectancy is 70.64 per trade. Okay, cool, whatever. Profit factor 1.32, which is profitable. Yes, cool. We have a win rate or win percentage of 32.14, which is not great. But I think it's better than the 19% of last month. So we can start there. And then the average win-loss makes up for that number not being that good. This number is actually very good, at least in my opinion, 2.79. Let's set the stage here before I get into the deeper details of the strategy. We were trading on a $10,000 account and two $25,000 accounts. $10,000 and $25,000 are in Arctic funding, which are here. Here's the 10K. This is a funded account, which is now at 10,145, roughly. Funded, so I could pull profits out of this one. This account is the $25,000 account on Arctic funding that is now up to 25,487. This is not funded. This is on step 1, I believe, or phase 1 of the 2-step, and then you get funded challenge. These are only stocks. Only stocks are being traded in these accounts. This account is one of one funding. We are currently just shy of $26,000. Need to get to $27,000 to pass phase 1, which is taking some time. Not losing, but we've been, shopping around for a good period of time. This, I do not trade stocks. I trade on the Trade Locker platform, and I trade crypto, or crude oil, and the metals. And then also, I guess, index. It's S&P, NASDAQ, or Dow. So that's how that all goes. Inside of here, some weird things have kind of happened. 2 times in the past about a month and a half or so. From the past month, they have had a glitch on the weekend where all of a sudden it blows out my accounts and says I hit the drawdown. I did not. They would have to then reinstate my account, which is kind of annoying, but they reinstate the account, they fix the balances back to what they were, and it is what it is. They blow out my positions, so I have to re-enter my positions and all that stuff, which is a pain in the ass. I'll be honest. A pain in the ass, but it is what it is. They're trying to make it right. So I appreciate that, but I just don't see why they have so many problems, and it is kind of annoying. Okay. So those are the accounts. So you can do the math and say, on stock trades, I have a trade copier connected, so it takes the same trade on the 10K and the 25K. Just it proportionally sizes the 25K. On stock trades, I'm trading with $35,000, and on anything else that's not a stock, I'm trading with $25,000. Okay. So that sets the stage. Next piece is I trade one strategy. So the strategy is a breakout strategy up and a breakout strategy down, depending upon the overall market conditions and the setups that we get. That will determine which way I'd go. I don't care about your strategy, and all due respect to your strategy and I don't care about yours. This is mine, my data. I do what I do, or I make these videos based off my stuff. Does that mean that this is the best way? No. It's how my brain works. It's what I like, and I prefer to trade this way. And until I have a lot of data telling me not to do so, I will continue to do so, and I will try to get better at doing so. Okay? We get that straight. The sizing is kind of bumped up a little bit because I was trading with a 10K and a 25K for most of the year. So if we go to year to date, here is our current stats on year to date. Up 2,600. It's actually almost 26,666. 40% win rate. Average win-loss 1.86. Profit factor 1.24. So take a step back and let's look at what we have, right? Comparing our stats of this month to the year. Okay. Our profit factor is higher. Our win rate's lower, but our average win-loss is better. So our profit factor is kind of a product of both of these numbers. So compared to the average, we actually had a decent month compared to this year, if we're being honest. So I'll take that and I'll run with it. Where I think I could have done better, before I get into the reports, and we're going to go through all the reports in a second, is earlier in the month, I started the month off pretty much being down about $600, like right from the get-go on the 3rd of September with too many trades, and on the next day, the 4th, with a couple of trades as well. Break even and then a loss. I believe I started the month off pretty much the exact same way that I started off the month of August. And I was hopefully not going to do that. And that was kind of the thing that I, was like, I'm not liking it. And so I put myself in a $600 hole immediately, and we recover back and we end up getting up nearly $1,000. And then we give back a good chunk, about a half of that, roughly half of that, into the end of the period here. Not bad. There's a couple of trades that just didn't work. A bunch of trades actually that just didn't work towards the end after closing out the gold trade and making a nice $400, on that. And then just kind of The sizing is at a point, though, where I feel like these numbers could be skewed. If you catch me after I close a couple of green trades, I'm going to look like I'm doing much better than what I am. If you catch me after I close a couple of reds, I'm not going to look as good. And I happen to close a couple of reds as of late, so not as good. I think I can boil it down, though, to a couple mistakes, a little bit of over trading at the beginning of the month, which I think was kind of a product of last month and being like, okay, I want to move on, I want to move forward, and kind of having that feel of like, man, I feel like I should be doing something, but I shouldn't be because the setups are just not there. So I thought that they were bad setups. They just were like, did I need to take them on the bigger time frames? No. And so I could have just stepped back like I have been doing the past couple of days of just not day trading very much because I just don't see a reason to do so because the higher time frames are very choppy and not aligning with what I want to see for me to take a shorter time frame, smaller time frame trade. So that's a start. Next would be lows and the NASDAQ. So if you look on the left here, the NASDAQ, we lost $5. It was about a break even. And then lows, we lost about $168, $169. Those two trades, if you go back to those two trade recaps, which are up on the playlist, the trade recap playlist, I'm not going to go into them now because I talk about them then. That's where I think the difference is. Lows, in theory, not in theory. The idea worked. It hit take profit today as I'm speaking without hitting my original stop loss had I just set and forgot. Do I regret what I did? No. It's one of those where like what happened, that super crazy wick is just not, I can't control that. That's why I try to trade more liquid stocks. And Lowe's is fairly liquid, but maybe not as liquid as a Home Depot. And so that's where maybe I could have played Home Depot instead and have the take profit hit. And that would have been a profitable trade in the ballpark of $400 green versus $169 red. That's a pretty big swing, right? From taking the $169 loss, instead of taking that, wipe that out, and then give me $400 profit. That's a needle mover. The NASDAQ trade as well, I missed where my take profit was, or I miscalculated my take profit a little bit, and so I didn't take profits when I should have, and then when my original plan was, and then it rolled back over and hit my break-even stop all the way back down and gave back the entirety of the gains, which was about $300. So do the math there. That's a pretty good swing, nearly $1,000 swing in the account that, 2 trades, 2 decisions, 2 little things we learn from those mistakes. Are they bad mistakes? No, but they're little things that if I was a little bit more on top of my game, I think we can clean up going forward. Can't catch them all, as they say, but we can do a better job of that, I think. So that kind of gets that out the way, so we kind of have an understanding of that. Let's get to the reports. That's what it's all about. So, all right, trades by day. I'm going to pop myself off the screen so you can see what we got going on here. Nothing crazy to talk about there. A lot of swings I closed out end of the week, and partially because I had to, or they took me out of trades on Friday. You know what I mean? So this is a little bit skewed. Nothing crazy there that I think is worthwhile noting. Talk about all the trades that I took. Really nothing crazy. eBay was a big winner. It was one time. I pretty much traded that. It says 2 because of the 2 accounts. Roku 4, but really it's 1 trade because I got closed out of the position there. Netflix, same thing. It really says 4, but it's really 2. And it's the same trade. So I really only traded it once, just on 2 accounts. So that's the deal there. And the NASDAQ, I think that you could, we took a couple of shots on that. Some win, some lost, some break even. That's what hurt me, but nothing terrible. So nothing crazy there. This is better to look at, I think, at the end of the year. So we'll get into the good stuff now. Setups. Bull flag, bear flag. This is just the way I see bear flags and bull flags. It's usually horizontal consolidation breaks. I call it that because I call it that. There is no one way to read a bull flag or one way to trade a bull flag. So I just call it that. That's what I say. It's a kind of a disclaimer there. And it's how my brain works. So call it whatever you want to call it. I call it that just to make it easier for myself. We obviously lost on bear flags, made money on bull flags. Not surprising because the market was going up. Generally speaking, the market's been going up. And that has been the same kind of pattern. I'm surprised I took that many bear flag trades, though. Yeah, I'm surprised it was not a lot less. I think if I took like half the amount of bear flag trades than bull flag trades, I think I would have had a better P&L, given the overall market conditions. Mistakes. This didn't take profits on that one trade on the NASDAQ. Not making it sound like I didn't have any mistakes, but worth logging. I think that was really it. Otherwise, I traded fairly close to the system. I could have maybe traded less on the beginning of the month, but nothing like terrible. That little export thing you saw at the bottom there, that is because TradeZella is actively syncing up with all of the accounts or any of the brokers that I use. It syncs it, so if I take trades, it'll automatically, within a couple hours, load them in to TradeZella on the front page or into the back end, and so it tracks all my stuff. So that's what's going on the bottom there. Custom tags, this is where it gets good. I track pretty much the only things I'm tracking right now. This is a thing I put a custom tag on there, trading in a higher time frame volume node. I'm not sure how much data I'm going to get on that, but I just logged it weirdly enough. What I think is really interesting, and this is where I think we get a lot more, this gets to the more of the meat of the video. We're starting to notice a trend, and I think you could have made this assumption earlier on in the year that, the daily time frame is making you more money. The 4-hour time frame making you more money. So bigger time frames making you more money. 5-minute time frame, you're taking more trades, but you're losing money. And that's where more of the time is getting taken up because I'm watching the trade take place for 5, 10, 15, 20, an hour, 2 hours sometimes. Usually not that long, but sometimes. Whereas on a daily time frame, I'm in and then I get in and I go about my day because the stop loss is so far away from the entry that it won't hit usually within a couple minutes. More than takes a couple hours at least. And same as take profit. Takes a couple of days usually. So something to think about there as I'm seeing that. But what I wanted to dive into though was check this out. Now let's jump out to year to date. We still got time for the year to, we still got 3 more months, October, November, December, but check this out. Here's where I think we now have this is where we have a very clear situation going on. Check out the 1-day time frame where we have now taken on the year 44 trades. It's a decent sample size. Okay. We have made over $3,100 doing so with the current sizing that I have. 5-minute chart. We've taken 123 trades, well over double. And we are currently up only $155. Is it green? Yes. Is that enough for me to go, holy crap, that's worthwhile trading? No. That's like break-even trading for the amount of trades that we have there. That is very notable. I'm going to give it to the end of the year. I'm not opposed to trading the 5-minute time frame and day trading, But what this tells me is we should be focusing on the 1 day time frame and the 4 hour time frame. That's it. Simple as that. All right. The weekly, the 1 hour, not terrible. I would like more data. Same as the 4 hour. I'd like more data on those guys. So we'll see what happens. But here is where I'll come back on the screen. Here is where this gets really interesting, because when you see data that is that clear, right? When you see, let me go back to this year or this month. When you see data that is that clear, not last month, it makes you really start to contemplate what you're doing. And this is the entire purpose of TradeZella, in my opinion. Why do I track my trades with them? Why do I well, I could do it myself, I guess, if I want to. They save me a lot of time, so that's why I use them. Why do I track in the first place? It's to gather data, to track data, to tag my trades, and to get data like that. Now that I have data like that, that is very interesting and tells me, two things. Day trading on the 5-minute time frame, we tend to not do as well. A. Swing trading on the 1 day time frame, we do well, and it takes less time. I mean that from the sense of it takes less time that I'm sitting there watching the charts. I enter and I go about my day. I check in, I go about my day. It's making me more money. I'm kind of doing less. Light bulb kind of starting to pop off, maybe. Okay. Let's go back to this really quick for a second. And now it's at the bottom here. So the 1 day chart let me go back to year to date. Okay. So year to date on the 1 day chart, I have a 61.36% win rate. So if I hover over these little boxes or these little colors, it'll tell me a 61% win rate. That is pretty freaking good. I'll be honest. So what I'm finding is I'm actually, in the case of this year, not really, because the 5-minute chart is technically positive, but I'm actually like sabotaging myself by trading the 5-minute time frame on some months. I go to the 5-minute time frame down here. I have a 34% win rate. Now I manage risk good enough to make that profitable. So that's cool. That's a good sign, but a 34% win rate. And that's what I'm spending most of my time doing, or more of my trades doing. That doesn't sound good to me. Like, that doesn't make sense, right? That doesn't make sense. Why would you keep doing that? You know? So it's now, again, like I said, data. But I tell you that for the 5-minute time frame, I got a lot of data. I definitely do. You know, so we'll see how the year finishes, but all that this is telling me is it doesn't bode well for 5-minute time frame charts for day trades, and it definitely looks more promising for swing trades. And I'll be honest, I prefer swing trades. So the problem that I've had, and I've talked about this I actually recently made a video on this, on the TC Trading channel. So if you're not following that channel, I think it's a good channel nowadays I get a lot into psychology. That's what I'm interested in, and so I post those videos there. What I kind of grapple with, and it's a good time to talk about it here too, is what I have had to grapple with in the past is I want to trade. Like I want to trade to see what I can do. And I want to do what makes the most sense and what makes me money. Hence the 1 day charts, the swing trades. But I also feel like I'm doing nothing a lot of the time because, right, you don't get swing trades every day. There's a couple a month, and some months there's less, some months there's more. And you kind of go down that slippery slope of, well, you could start forcing trades and seeing things that really aren't there. And so you got to avoid that. And so I think what I've done is I've almost let the 5-minute chart become that escape outlet to FOMO. I don't know, to try to do more when it's not moving the needle very much in the grand scheme. So I think we see the potential that we could have. Let's say we move to daily time frames trades. The issue that I've had with that is, okay, you go through the year and you'd be up $3,000. Well, guess what? I do the day trade, I swing trade, and then I also day trade a lot, so I'm taking a lot of my time, and I'm also up pretty much $3,000. It's not like it made the needle move much more. And so even if you scale up, and even if you're barely profitable day trading, like you'd say, okay, well, it's still, you're getting a return on your time. Yeah. As you scale up, yeah, it might make more sense because your dollar per hour rate will go higher if you're using a larger account size. Yes, I get it. But is it worth the time commitment? And would it just make more sense to focus on the swings and then use the time to do other things to make more money in other ways, other work, other ventures, or use it as my free time to do other things? You know what I mean? So that's where I'm grappling. And you get to that point of like, well, I'm on a $10,000 account, a $25K account, so the sizing is $35,000 is my account size. And so the way I do it based off the prop firms is I don't allow myself to risk more than what would be the equivalent of losing 11 trades in a row to fail the accounts. So I'd have to lose 11 trades in a row, essentially 10, 11 trades in a row for me, at max full risk, to lose the accounts. So based on that sizing, I still feel as if it's not enough. And this is honest, what I'm telling you. I feel like it's not enough. And so that's been the problem that I've had. You're grappling with doing what you pretty much know is the right way to go and what you should do, but that not being enough from a dollar perspective. So you feel like you need to do more and trade more, yet that's not actually moving the needle at all, and it's wasting your time. This is what's happening. And I talk about this a lot because on the psychology videos and the TC trading channel, because it's like a big deal. Like it is legitimately, like I talk about it because I'm going through it and I'm recognizing it. And I think it could maybe benefit some other people because everyone's going to be dealing with something similar, I'm sure at some point. So how do you combat it? How do you fix it? What are the plans going forward? The way that I plan to combat this, let me go back into here. A is to slowly but surely size up. And what I mean by that is once we pass the 25K account, I'm going to not immediately, but I'm going to shortly thereafter that, buy a $200,000 account. So the trade sizing will become in the coming months, if all goes well, right, will become much more substantial. So we'll get over that issue of it not being enough. A, like that will just fix itself. But B, I'm kind of starting to take a back seat to that and trying to do a better job of sitting here and saying to myself, dude, relax. If you simply do and follow the data and do what you're doing, follow the data, do what's working, roll with that. It might take you a bit longer, but you will eventually scale it up anyway. Like you'll make money, pass the accounts, get the payouts, scale it up. You will do that anyway. The focus is too much on the dollars not being enough. Like you look at this and go, yeah, dude, like you traded all this time and that's all you got to show for it. Yes and no. There is an argument to be made for that. I hear you. But I've also stepped back and said at the beginning of the year or prior to that, I am willing to go through however long it takes to truly get a grasp on the system, know my shit, and then when I am dialed the fuck in, as we're, the longer I do it, the more dialed in I get. I keep cranking that, right, one piece at a time, one, level at a time. The scale will come like this. All it takes is just spend the money to buy the bigger account size, trade the bigger account size, and that's it. Do the exact same things you've been doing, just do it on a bigger account size, and now the money falls into your lap, and now it's like, instead of 2.6K, it's 26K. It's 50K in profits for the year. Doing the same exact thing. All we're doing is just trading with a larger account size. So same risk rewards, pretty much. Obviously, the dollars will be different, but the same profile. That's where the head is at. So I'm trying to take a step back, and I think a big piece as to why this number is so high is because of that feeling of I want to get there. I want to get there, and I want to get there. But I'm trying to do a better job. I'm trying to relax and sit back and be like, we know where we're going. I know where I'm going. I'm going to get there. However long it takes, I'm just going to sit back and submit to the process of however long it takes. And if I follow the data, I do the recaps, I do these videos as it's me talking to me, literally. I'm looking at myself in the camera this is me talking to me. If I just follow along with that approach, we will get there. However long it takes, but we'll get there faster. Faster than you think, as long as you take a step back, hop off the stage, if you will, from one of my favorite books, Reality Transurfing. Objectively look at your life and what you're doing, your decision making. Make sure it's in alignment with where you're going, and roll. And I think when you look at the reports and the data like that, we kind of fallen off alignment. We're not aligned perfectly, and then once we can align back up, could be off to the races. So that is the month of September recap. A lot of psychology, a lot of, maybe that was interesting. Maybe it wasn't interesting to you. Maybe you're not watching. If you are still watching, you're amazing. And we'll see what happens. So you can go back and watch the other recaps. If we have other recaps coming out, I have one open position on Roku right now as I speak. If I have, new closing positions, I'll talk about them in a recap. So you can stay tuned to that. And hope you have a great rest of your day. And I hope these videos are a interesting approach to kind of peeking inside my brain and could be useful to you. Will you trade the same way as me? No. Even if you watch all the recaps, see what, you're not going to be able to replicate that. And I don't want you to, because first off, take what you can from it if it's useful, but you're you, I'm me. I see things different than you see things. So you have to just, I hope if you're looking at this as I want to strive to be like that, if that's how you view it, look at it from the way that I think, the way I critique myself, the way that I'm seeing the stats, I'm taking the data in, and I'm okay, I'm seeing this, I'm going to now go do this. Based off, see that, and hopefully that's more helpful. I think that is more helpful, to be honest. I mean, I know it is more helpful. If I had been growing up, because I'm 26 now, go back to when I was, I don't know how old I was, 20 years old, when I first kind of got into trading maybe. If I had seen earlier in my career, you want to call it a career? If I had seen somebody doing this, I think it would have been so much better for me back then. That is why I do it, because I did not have that. I had look at me making however much money in a day. Look at me with my fancy car. Look at me telling you can be like me and I'm going to sell you a course. That's the influence that I had. I did not have a lot of look inside my brain. Here is how I am thinking about it. Here is what I'm doing. Here is how I'm trying to improve based off of this data that I'm getting. If you're a little more analytical, it's not hard. It's simple, I should say. It's not complex. It's not easy, but it's also not hard, as long as you follow what the data is telling you. Thanks so much for watching. I'll see you in the next one. Peace.